Welcome back to Patrick Boyle on Finance. This morning's big stock market news is that the Shanghai Stock Exchange has suspended the IPO of Ant Group, the Chinese fintech spin-off of Alibaba, in a surprising twist just 2 days before what was supposed to be the largest IPO in history. In an online notice posted today, the Shanghai Exchange said that the company's proposed offering may not meet the conditions for listing after Chinese regulators summoned Jack Ma, Ant's controlling shareholder and the founder of Alibaba, for a meeting yesterday. Alibaba is down around 6% as of this recording, having been down even more this morning in its New York listing. So let's discuss what's going on and what might happen with the Ant Group IPO. Okay, so this is breaking news right now, so it's rather difficult to say exactly what's going on. But essentially, Ant Group's $37 billion public offering in Shanghai and Hong Kong has been suspended by Chinese regulators 1 day after officials summoned Jack Ma and some other Ant executives for an interview. Ant Group, which is China's largest fintech company, was set to list this Thursday in both cities in a record-breaking IPO. Neither the regulators nor Ant have disclosed what was discussed at the meeting, but the timing of the meeting just days before Ant shares were expected to begin trading, concurrently in Shanghai and Hong Kong, suggests that the Chinese government is unhappy with either the company or with Jack Ma. The Shanghai Stock Exchange said in a statement that Mr. Ma, Ant's founder, had been called in for supervisory interviews and there had been other major issues, including changes in the financial technology regulatory environment. This material event, they say, may cause the company to fail to meet the issuance and listing conditions or information disclosure requirements of the exchange. The exchange said, "Our exchange has decided to postpone the listing of Ant Financial." The exchange then told Ant and its underwriters to make an announcement about the suspension. Shortly after the Shanghai Exchange made the announcement, Ant said that it would also suspend the Hong Kong leg of its listing as well. Over the last 10 years, Ant has transformed the way people in China interact with money. The Alipay app has become an everyday payment tool for hundreds of millions of smartphone users in China, as well as being a platform for obtaining small loans and buying insurance and investment products. In doing so, Ant has challenged the dominance of China's state-run banks and other state-connected financial institutions. Regulators have shown concern over Ant's fast growth, and they have expressed in the past fear that it may be too big to fail. Now, Ant has reacted to this criticism over time by reducing its use of its own money to extend loans, now effectively acting as an agent for banks, introducing them to individual borrowers and small businesses that they might not otherwise reach. A lot of people are pointing to a speech that Jack Ma gave last month, criticizing China's state-owned banks at a financial summit in Shanghai. Mr. Ma suggested that the big banks had a pawn shop mentality and that Ant was playing an important role in extending credit to innovative but collateral poor companies and individuals. On Monday, so yesterday, a Chinese financial regulator criticized Ant and other Chinese fintech companies, noting that their consumer lending products charged higher fees than credit cards issued by banks. In addition, he said that fintech companies often lured young people into overspending, so that some people in low-income groups and young people fall into debt traps. Around the same time, the PBOC and China's banking regulator jointly released new draft regulations on online lending this Monday, which will oblige Ant to cap loans at around $45,000 or 1/3 of a borrower's annual pay, whichever is lower. These new rules could make issuing loans across China's provinces harder, and some analysts are saying that it will definitely impact Ant's expected earnings. Now, in a press statement, an Ant Group spokesperson apologized for the suspension of its IPO, saying that they will work through the regulatory concerns with the Hong Kong and Shanghai stock exchanges. Now, I made a video probably a little over a week ago about antitrust regulation and how US antitrust regulators are starting to look at the US tech giants like Google, Apple, Facebook, and Amazon. Antitrust is always an issue in the world of finance when dealing with very large companies that have dominant positions in their marketplaces. It is, however, extremely unusual, or in fact kind of unheard of, for antitrust type issues to raise their head this late in an IPO process. This can't be good for investors' faith when investing in Chinese companies, and is most likely designed to send a very strong message to business leaders in China not to step out of line with the government. Let me know your thoughts in the comment section below on this issue and whether you think the Ant IPO will even go ahead at all. And don't forget to hit the like button and subscribe if you want to see more content like this in your YouTube feed. Talk to you soon. Bye.